Hey everyone, get ready because we're talking about a stock that's been on an absolute rocket ship this year, Palantir, ticker PLTR. This company has exploded, and its recent earnings report just dropped, shaking things up even more. But here's the burning question. Can this incredible ride continue? I've got all the latest details, including a surprising look at what Wall Street really thinks about its future price, which I'll reveal at the very end of this video, so make sure you stick around. First off, let's talk about this stock's amazing performance. Palantir has been the top performer in the S&P 500 stock index this year, with its shares soaring by over 100%. It was even the leader last year, jumping a massive 340%. Since late 2022, after hitting a low of about $5.90 a share, it has delivered unbelievable returns. In fact, since 2023, the stock is up more than 1,000%. We're talking about a company whose total value has now shot past about $379 billion, placing it among the top 10 U.S. tech companies by total value. So why is Palantir doing so incredibly well? It's not just hype. Their business results are backing it up. They've seen major improvements. Over the last 2 years, especially since they launched their artificial intelligence platform, or AIP, their revenue growth has steadily picked up speed, and they're making more money from every sale. They've gone from a slow-growth, barely profitable company to a fast-growing, high-margin business. In their latest quarterly report, which just came out, Palantir absolutely crushed expectations. They reported earnings of 16 cents per share, beating the 14 cents expected, and for the first time ever, their quarterly revenue hit a whopping $1 billion. That's a 48% jump from a year ago. Wall Street wasn't even expecting them to hit that $1 billion mark until the end of this year. Their CEO, Alex Karp, said it himself, "The growth rate of our business has accelerated radically." And it's true. Their U.S. revenue, for example, jumped 68% from a year ago. Their commercial business, where they sell to private companies, nearly doubled its revenue. This strong performance has led them to raise their future financial outlook. For the entire year, they now expect revenue to be around $4.1 billion, a big jump from their previous prediction. They also expect their next quarter's revenue to be higher than analysts thought, forecasting between $1.08 and $1.09 billion. They're closing huge deals too, signing 66 contracts worth at least $5 million and 42 deals worth at least $10 million. The total value of their contracts has soared by 140% from last year, reaching over $2.2 billion. Another major driver for Palantir is its strong ties to the U.S. government. This company actually started by working with government agencies, and that remains their biggest source of income. Just recently, they secured a massive new deal with the U.S. Army, potentially worth up to $10 billion over the next decade. This huge contract consolidates many existing agreements, making Palantir a core partner for the Army's future software and data needs. They're also helping other agencies like Immigration and Customs Enforcement develop new platforms. With the current administration's focus on data sharing and efficiency, Palantir is perfectly positioned to benefit. This makes their business more resilient even if the economy slows. The current market environment also plays a role. We're in a risk-on period where investors are feeling more confident and pouring money into high-growth areas like artificial intelligence. Palantir, being a leader in AI software, is a favorite among these investors. However, with all this excitement comes a big but. Palantir's stock is trading at an extremely high valuation. Its price is about 120 times its yearly sales, which is about 40 times higher than the S&P 500 index overall. Some analysts are concerned it's drastically overvalued. Its stock price is over 440 times its expected yearly earnings. This means a huge amount of future growth is already built into the current stock price. Traders are expecting a big move after these earnings. Options pricing suggests the stock could swing by almost 11% by the end of the week. Historically, after earnings reports, Palantir has moved even more, averaging over 17% in its previous 4 reports. So here's that crucial detail I promised you. What do Wall Street analysts truly think about Palantir stock right now? Despite its incredible run-up and recent strong performance, most analysts are actually quite cautious. Out of many analysts covering the stock, only a couple have a buy rating. The majority, about 7, have a hold rating, and a few even recommend selling it. Their average price target is around $107 to $115, which is about 30% lower than Palantir's recent levels. Even with some bullish predictions, like one firm raising their price target to about $178 and calling Palantir the, quote, next Oracle, the overall sentiment among analysts suggests that the stock's high price tag could make it vulnerable to any slight change in market sentiment or business trajectory. While its AI leadership and strong government contracts are clear advantages, the challenge remains for the company to grow into its eye-popping valuation. That's the latest on Palantir. If you found this helpful, please give this video a like, subscribe to the channel for more market updates, and hit that notification bell so you stay ahead of the markets. Thanks for watching, and I'll see you next time.